What's up, Trader's Edge? It's Mark Sebastian, your only option with your midweek update. Today, I'm going to tell you what's going on with the SPX, what's going on with the Qs, why NVDA is a vampire, and why interest rates are really the key to the whole thing. And we'll take a look at the VIX. So, with that, let's dig in. Here we are. We are looking at SPX. SPX is down as I'm doing this about 0.5%, give or take. It is off the lows of the day, but we are noticing a nice increase in implied volatility. VIX is off the highs, obviously, because SPX is off the lows. The level I'm watching is the low from the 23rd. Now, the low on the 23rd was 52.56.93. That is kind of the level I'm keeping an eye on. The low from Thursday did not quite get there. That was 52.62. So as it stands right now, we're still just kind of in limbo land. It's interesting that we've now not been able to break 5,300, or we're kind of like bumping into 5,300. That seems to be like an area where the market really can't seem to figure out what it wants to do. Now, what's driving us lower? Well, it's not the Qs. The Qs actually look relatively strong. We've got some, NVIDIA is down a little bit on Wednesday, but you've got strength in Apple and Amazon that's kind of holding. So money is kind of rotating between these different names. But when NVIDIA is going up, what bugs me, and this is kind of the crux of the argument. So NVIDIA is now up on the day. I take that back. It's up about $9. Thus, the NASDAQ has had a nice recovery. But look at the run NVIDIA has had over the last few days. And I want to take you to a 10-day chart. Here is NVIDIA. And I'm going to show you what SPY looks like next to it. So in the last 10 days, so going back to a week ago, Monday, 20th, the S&P is down 0.5%. NVIDIA is up 22%. NVIDIA is the market. Why is NVIDIA rallying when the S&P isn't? And the answer is not the greatest thing for the market. It's bonds. Bonds have started to fall apart again. TLT is getting absolutely smoked. IEF, which is the 7 to 10 year note, also getting smoked. I'm really watching these levels. So IEF is only about 83 cents away from the low of April 25th. If you look at the market rally, it was directly tied to movements in interest rates. And now that interest rates pulled back, the market is pulling back some. Now, what's interesting is we're not reacting that hard. That's because NVIDIA is going up, and a few other NASDAQ names are going up. But as a whole, market breadth looks terrible. Let's pull up RSP. This is the equal weighted S&P 500. So it's not cap weighted. It's equal weighted by sector. And since the 20th, this thing has gone from 168 down to 163. So it's off pretty nicely. I think that's a good view into what's going on with market breadth. And market breadth kind of stinks. So you have the Dow down 300 plus, S&P down 0.5, but the Qs and kind of the mega caps within the Qs are holding the market up. But if bond prices start to fall, and then the bid in NVIDIA dries up, that is where things could start to fall very quickly for the market. So if NVIDIA loses its bid and bonds continue to soften, the speed with which we could be back to 5,000, I think would shock you. It's only about 5%, but that is what is in the table. And we're seeing a little bit of reaction out of VIX to this. So VIX is now sitting at call it, a 2-week high, but the vol, so how expensive it is to buy VIX options, is still really inexpensive. So it is not expensive to hedge. We were looking at about 3 different VIX trades here today in Trading Desk. one related to bonds, one related to VIX versus UVXY. There is a ton with VIX moving and VIX vol this inexpensive. It is a really good opportunity to play in the volatility space. So, we've kind of looked at interest rates, we've looked at VIX, we've looked at SPX, we've looked at Qs. I want to close by just kind of taking a little look at energy and gold. Energy, after having a pretty strong day on Tuesday, is pulling back a little bit. I do like energy to go up. I do. Gold, kind of a similar situation, got completely overbought, kind of pulling back here. If it gets down to like below 215 and certainly gets to 200, it could be an interesting opportunity to go long. Gold vol not overly expensive. So that's kind of the interesting piece of this pie that I'm seeing. We still do have a few interesting earnings coming up this week. Nordstrom at the end of the week. Few other names that are floating around out there that still have to report. So we're not completely through it, but none of the like massive names are going to be reporting. I would note that XRT is maybe one of the few areas that's a little bit green today. So it's interesting. And lastly, I want to just revisit a trend that I talked about, right? We had bad earnings from TripAdvisor, bad earnings from Airbnb. Some of the hotels have had bad earnings. And then today, American Airlines is out warning. I believe the consumer is starting to get squeezed, and that could create some real problems for the market, folks. Keep an eye on these consumer discretionary names. If they really start to soften up, that is where we could really see things start to turn over and roll over. And that's where interest rates popping pushes and the weakening consumer at the same time. That's a recipe for the market to have a little bit of a correction. All right, folks. We are still in the throes of launching OptionPeak University. This is our new educational portal where you can get amazing, interesting educational content on options trading and options education. We're adding new content just about every week. And for those joining that are founding members, you will have the ability to request classes. And that's what I think is really cool. The lifetime price is ridiculously inexpensive, totally worth your time. You can check out the offer in this email. If you're watching me on YouTube, please like, subscribe, leave a question or comment, and I will get to it. All right, everybody. I am Mark Sebastian. I am your only option. I hope you have a good one.